Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. How y'all doing? Hopefully everybody doing well. If this is your first time tuning in to Tim's Tidbits, allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. Y'all see it behind me. That just mean big spot if you don't hablo Espanol. And you're in tune to another episode of the NQ Futures Price Action Recap. Yeah, hear me. And they hit them off with the new. That boy been going AI crazy. You feel me? Hey, man. Shout out to everybody who pulling up with us, man. How y'all doing? Come on in. You know, like I said, if this is your first time tuning in, welcome. Go ahead and share this with somebody who you think might get something out of it. Do me a favor, hit a like for the algorithm so it'll put it in front of more people. You know what I'm saying? And we can let more people know that I'm not a bear, a bull, or a bear. I'm just a beast. Yeah, what's going on? Here to learn and share. What's going on, honey? See honey in the chat. See here to learn and share in the chat. If I can pull up Zoom. We got Lump in the Zoom. We got Steve in the Zoom. Lump in the chat too. Shout out to everybody that's in here, man. Y'all pull on up. It's slacking here today, man. Yeah, man, people busy. People like Tim, you don't be coming on live every day no more. We don't know when you gonna go live, so we don't be checking for you. So hey, man, y'all give it up for yourself if you in here, man. If you in here right now, get up for yourself, man. If you in here right now, drop one of Clue's bombs for yourself. You know what I'm saying? I appreciate y'all for pulling up. Y'all could be anywhere else in the world, but you chose to be here with me. Without further ado, man, let's go ahead and excuse me, that Klondike bar came back with a vengeance. Like I was saying, man, without further ado, let me go ahead and share my screen, and we're gonna go ahead and get into it, man. As you see here, looking there above my head, if you look over here, over here above me, excuse me, we got the NQ daily chart here. Guess what? Guess what? We are not outside of that range. We are still inside. When are we going to get out of this range, man? Well, Tim, what range are you talking about? I'm glad you asked that question, little Timmy Rogers. This doggone range here. We have been in this range for a long time. Let's see how long we've been in this range. Let me see here. So we're not going to count that day. That's the day we made that low right there. So from this day right here over 29 trading days, 42 calendar days. That's over a month. That's longer than a month that we've been in this range. If you feel like price has been difficult, if you feel like price has been chopping you up, if you feel like price has just been like, man, did they change the algorithm? Did they like if you feel like price is being manipulated, guess what? You are not alone. I am here with you. You ain't alone, man. Because why? We just been engineering liquidity. What happens when price engineers liquidity, right? It goes up, it goes down, it goes up and down, it goes up, it goes down, it goes up and down, right? While it's going up and down, it's engineering liquidity pools on the top and the bottom of price, right? Every time it goes up, people like, oh, we fun to take off, so they put stops down here. Every time it goes down, people like, oh, we fun to go down, so they put stops up here. So it's just letting those pools of liquidity accumulate, right? So, and it's not only just been these, what he said, 29 days, 29 trading days. If you look back over time, we've really been in a very big consolidation range for a long time. This right here, this is all the way back to October 2025. This is far back as this contract can show. You know, we got some sketchy price action like throughout then, but you can kind of see. If we jump over to the NQ continuous chart, that's NQ1 exclamation point on trading view, right? And we can see right here, right? We've been in this range accumulating, engineering liquidity, consolidating, whatever you want to call it, for a really long time. Ever since did I say March? October of 2025. Right? Really long time to be engineering liquidity. Right? But Tim, how long can they hold prices? They can hold it as long as they want to hold it. As long as they want to hold it, they can hold it. Because guess what? When you look at the dollar index, right? And you look at a dollar index and you say, hey, right? If the dollar is rising, right? If the dollar is rising, I anticipate the indexes to fall, right? Because, you know, you got that risk on, risk off scenario, right? Risk on, risk off, right? If the dollar is going up, right, then I think that's risk off. So they be taking the risk off over here. So these should come down, right? And if the dollar is going down, that's risk on. So these over here, get back up there where you're supposed to go. Get up there where you're supposed to go. Okay, these over here should go up because it's risk on. They're putting on risk. But when this goes up, these don't have to come down, right? They can just consolidate. They can just hold in place, right? And it accomplishes the same thing, right? Consolidate and accomplishes the same thing, because that allows the price, the accepted price, to catch up with it. Like, that gives everybody the mindset of, okay, I'm okay with this price, and it catches up to where price is. Or you can have a retracement and they reprice it back down to the acceptable price before rallying back up, right? So the consolidation, they can keep it there as long as they want to. And as you see, it's been there a really long time. All right. Now, jumping back into the more recent price action, right? Get back over there. Jumping back into more recent price action here. Let's zoom in. Looking at last week, right? We've been having, up until now, it's been a inside week, right? It's just been an inside week. This is our highest high. This is our lowest low of last week, right? So, and this is Monday, Tuesday, Wednesday, and Thursday, right? All we have been trading inside the range of last week, right? This is our dealing range from last week, right? Our algorithmic dispensation in time that the algorithm understands. This is a week of price action, so it understands this as a complete dealing range, right? And we've been having a inside week. Monday, right? We traded back up, and this was, we look over here, this was our down close candle. We was looking to act as a bullish order block. Let's put our mean threshold on that so we can all stay on the same sheet of music. All right, we was looking at this to act as a bullish order block. So Monday, we opened up Monday, right? Gap down. We talked about this. This candle right here had traded down below the lowest low, right, that we had over here that we were watching there, right? It traded down below these lows over here. So now we've created a new low, right? We created a new low on a closing basis. All right, so once we created a new low on the closing basis on Friday, we gapped down below that low, and then we rallied back up, touched mean threshold of that down close candle, and traded into this daily SIBI from March the 12th. Okay, I don't think I have any of this on my chart anymore, so I got to redraw it. All right, so we're gonna go to a daily bearish fair value gap, include the volume imbalance there. Right, so we traded up, got an institutional order flow entry drill on that daily SIBI, right? Rejected off. Tuesday, right? We came in. This was a very bullish move, right? Even though we rejected at there, right? It was a very bullish move. Okay, closed back above. What did we talk about? It's been exhibiting examples of respecting bullish order flow once it creates down close or consecutive down close candles. Price every day has been coming back and immediately closing above mean threshold of the last down close candle in the order of consecutive, or back above mean threshold of the down close candle if it's just an individual candle, right? You don't believe me? Go back and look, right? Back above, back above, back above, right? This was an indecision day there, but if we come down, right, no decision at all, down close, no decision at all, next day back above that no decision day, right? So if you just look at that as, okay, it was still going down, but it closed in the exact same spot, right? But it was still going down, back above, consecutive, back above, consecutive, back above, right? And now we've created, right, a down close candle and pretty much another doji. This one is green and this one is red, right? So now we'll be watching to see if we close back above that mean threshold of that last down close candle, or maybe even, god dog it, I just deleted that. Right, see if it closed back above that last down close candle, or maybe even mean threshold of both consecutive candles. All right, so that's been the story. We're down here in the discount, right, of this bearish dealing range Okay, that's our highest high. This right here is now our lowest low, right? It was from here to there, right? We traded back up roughly around equilibrium, slight premium into this bearish order block right there, into this bearish break, or whatever you want to give the credit to. Then we came back down and extended the range, right? Once we extended the range, we were right back up into the middle of this consolidation, right? We came back down. Now this week, still have not extended the range, but we keep trading back up into the middle of this consolidation. So price still has not given us any clue as to if it wants to break out to the downside or break out to the upside. A lot of manipulation going on right now with price. Every time we have a chance to look like we're about to start displacing away, we immediately snap back in, right? And we're down here in a discount, and we keep showing signs of wanting to respect bullish order flow. Even though we keep eking lower, right, we still keep showing signs of respecting bullish order flow down here. No sign of wanting to rip to the downside, no sign of wanting to rip to the upside. No displacement up, no displacement down, right? What we got here with an opportunity to create a BSC leaving this area with displacement up, immediately pulled back to the inside, right? When we closed here with opportunity to start displacing away, immediately pull back to the middle of the range. Yesterday we traded down with an opportunity to create a SIBI this big, right? Today we traded up into the range, and we have a very small SIBI right in there, very small SIBI in there, right? But we also came down and took out this sell side liquidity there, right? We got a swing low right there, dropped down, took out that sell side liquidity, and then bounced back up inside of the range. Okay, so we're constantly manipulating the lows. What do I mean by manipulating the lows? Every time, look at the wicks. Every time we trade down below a low, we're wicking back up. Wicking back. Look at all these wicks on the bottom, right? Every time we trade down into sell side liquidity, we're wicking back up. Heavy rejection as we trade into sell side liquidity and pulling back into the range. Okay, so what does that do for you? Long term, not a thing. What does that mean? Continue to sit still and wait for the algorithm to tip its hand for your long-term trading decisions. If you're looking at options, if you're already in longer-term options, right, you might want to be checking to see, hey, am I still good? Is this eating up my premium? Right? If it's eating up your premium, you may want to, look at some shorter-term plays, like do some day trading to help offset the premium that you're losing because of this consolidation, right? Like we said, we've been from February the 5th all the way up to now. That's been 29 trading days, 42 calendar days, I think we said. That's a really long time to be eating into your premium. That theta, sorry y'all, I heard some crazy noise. That theta been chewing you up. That theta been chewing you up, man. Hey, daily time frame ain't giving us much, man. It ain't giving us much. It is what it is. All right, it is what it is. All you can do is trade within the range. We got a defined range that we can trade on an intraday basis. We looked at that before, right? You have a defined range you can trade on an intraday basis. You go from your highest high down to your lowest low of this range here, and then since it's a defined range and the overall sense of what the NQ has done, right? If we look at the overall sense of what NQ has done, it's very sketchy on the front month, But you see, this is a huge range from down here to up there. So that means that this area up here, this is a very small range in comparison to what NQ has done. So when you're looking at smaller ranges, right, you want to put it in the 8th grade, right? Put your range in the 8th grade, because that's going to give you a more fine-tuned more fine-tuned look at what levels the algorithm is going to use, right? There's nothing wrong with putting it in the 4th grade, meaning putting it into quadrants. For those who don't understand what I mean by 8th grade and 4th grade, right? So when I say put it in the 4th grade, you're breaking it down into quadrants, okay? And for those who always want to know what the fib settings are, here's the fib settings for the quadrants, right? You have the low, the high, the lower quadrant, the equilibrium, in the upper quadrant. The low, 0, the high, 1, lower quadrant, 25%, upper quadrant, 75%, equilibrium, 50%, right? Now, there's nothing wrong with putting it in there, but as you see, right, your bus stops are really spread apart, right? And when you're consolidating, if you notice, right, when you're consolidating in a tight range, if you look at the premium, right, of your range, right, there's a lot going on in this premium, right? If you look at the discount of your range, there's a lot going on in this discount that you can fine tune on an intraday basis. That's why when you're in a tight range, you want to put it into the 8th grade, right? So let's come over here and put it into the 8th grade, right? Put it in the 8th grade. And for those who want to see, there's your settings for the octants instead of the quadrants, the octants, right? So now, what does this give you the opportunity to do? Not only does it give you an opportunity to fine tune the levels and get more detail as far as what the algorithm is going to use, it gives you the opportunity to break down your premium and your discount into quadrants. So if you look at the premium now, right, now your premium is broke down into quadrants: upper quadrants, equilibrium, lower quadrant. Now your premium is broke down into quadrants, and your discount is broke down into quadrants: upper quadrants, equilibrium, lower quadrant, right? Now it's broke down into quadrants. So if prices hang out in the premium, right, if it's hanging out in the premium and you be like, man, how can I trade this? Now if you put it in the 8th grade, now when you look at it and you say, okay, price is hanging out in the premium, but now I can see it's in a discount, so I can look for reasons to buy, right? And when it comes up to the premium, I can look for reasons to sell, right? And then when you get, once you get below that lower quadrant, right, you can anticipate it to move outside of the range, right? Which it does, right? Get to the lower quadrant there, we move outside of the range, right? Trade back up as we come back down, get below the lower quadrant there, move outside of the range. Same thing here, get below the lower quadrant, move outside of the range, all right? And then when it's in the discount and it's still holding in the discount, upper quadrant, equilibrium, lower quadrant, right? Anytime it's in a discount of the range, you can look for reasons to buy. Anytime it's in the premium of the range, you can look for reasons to sell. All right. That's how you can utilize just from the daily range aspect. Now, when you do that from the daily range, of course, you got to break it down into intraday and look at what's happening per that day. But this can give you a good way to look at it from the higher time frame before you enter in that day and help you decide your trading decisions for that day while you're inside these tight ranges like that. All right, man, y'all get it? Y'all do me a favor, man, hit a like for the algorithm, and if you ain't subscribed to the channel, man, please subscribe. What are you doing? 8th grade, not the 4th grade. Yes, this range is crazy. Yes, this range is crazy. Before we drop down to the intraday time frame, anybody got anything for me? how did the 8th grade play out with today's price action? It played out. It played like every other day. Today was another day where it sent people to the reset line. You know what I'm saying? We, like, in the afternoon, when I came home this afternoon, I got home about, it was like almost 3 o'clock. And the price action loosened up real good for maybe about 5 or 10 minutes. It loosened up real good. And then it started going back and forth. You know what I'm saying? But it's been a lot of manipulation, right? But the octets, they work out well inside of ranges when you're looking for base hits, right? When you look for base hits, or if you're looking for entries, if you miss an entry at a quadrant level, right? The octets give you opportunity to fine tune an entry in between the gap, if you will. If y'all remember back in the day, right? I used to always tell you, right? If you got your quadrants, right? Let's see if y'all remember this. Throwback gang, y'all should remember this. If you got your quadrants, right? Right, we got our quadrants. I used to tell y'all, right, when price is hanging around, just say if price was hanging around inside, how price is hanging around inside this area right here for these days. Remember what I used to tell y'all to do? I used to tell y'all to come in here and put that quadrant level into quadrants like this right here. And then that helps you to fine tune entries on the lower time frames, right? For example, I'm just going to highlight these candles here, just going from body to body on these candles right here, right? And then I'm going to drop down to a 15-minute time frame and look at that shaded area right there. All right. See how the algorithm use those levels in between that quadrant level? That's just one quadrant level in the discount of that move, right? Because this is the high, this is the low, this is equilibrium. All I did was put that one quadrant level between the discount and the deep discount, right? That's equilibrium, fair value, short-term discount, to the lower quadrant, short-term deep discount. All I did was put that into the 4th grade, and look how price utilized those quadrant levels coming down. All right. Remember I told y'all, if you're using algorithmic anchor points, the algorithm will pick you up at bus stops, right? You think it's by chance that there's a SIBI there? You think it's by chance there's a SIBI there, right? A bullish order block there, a bullish suspension block there, a bullish fair value gap there, right? A bullish order block there, a bearish order block there, a SIBI there, right? A SIBI right there near that one, right? Bullish order block, bullish order block, bullish fair value gap, bullish fair value gap, bullish order block, bullish breaker, right? All of this stuff. You think it's an accident that the algorithm is creating these PD arrays at these bus stops? You think that's an accident? Rejection block there, right? See that rejection block right there, right? You think it's an accident that the algorithm is doing it at these price points? If you anchor your fibs to a algorithmic anchor point, that magical Fibonacci tool will change your life. I hit the wrong. Shut up, crickets. Shut up, crickets. I meant to hit clue. Drop one of clue bombs, man. I should have been recording that piece right there. That was. I need to get me a thing to say, let him cook. I need to get me a thing to say, let him cook. All right. Let me delete this stuff here. I'm gonna delete all of this stuff here, and if ain't nobody got nothing, we gonna drop down. We gonna go to the 60-minute time frame. All right, we're gonna look at our 60-minute time frame. If nobody, why does it look like something's missing? Something don't look right. Something don't look right. I don't know. I don't know why it look like something's missing. All right, that's our range. Let's put it back into the 8th grade before we drop down in time. Then we're gonna go ahead and drop down in time. I'm thickening up the line so y'all can see it. Got an 8th grade. Gonna drop down to the 60-minute time frame. All right, and then like we said, this was our opening of the week, right? Our opening of the week over here. We had a bearish gap down. This is our new week opening gap right there. And as you can see, right, I have our range, the consolidation range. We talked about this, our consolidation range that we're trading in, right? Highest high, lowest low of our consolidation range, and we put it in the 8th grade, right? This week, we've been having an inside week. Remember, this was the highest high, this was the lowest low of the week last week, right? Look at how price used the octants, right? We gapped down. Matter of fact, we closed just below the lower quadrant, right? This is the lower quadrant right here. That's the lower quadrant right there, lower 25%. So it's lower quadrant, that's equilibrium. It's the upper quadrant, right? That's if we had it in the 4th grade, right? These other ones are the octant levels, right? And then that's the highest high and the lowest low down there, right? So, but look how this octant gave you a trading opportunity. Oh, what's that right there? Is that a fair value gap sitting at that octant level? Right? It helps you fine tune when we're in a small range. It helps you fine tune your entries, right? If it didn't present you an opportunity or you missed the opportunity at the quadrants, right? Those octants help you out, right? And that's just like y'all used to hear me say, like I said back in the day, if the lower, right? This is our lower half right there, right? You can do the same thing with the lower half. We can come in here, right? And then we can put our lower half into the 4th grade, right? If we come down here and put our lower half into the 4th grade, you see what we get? Let me make it larger, right? We talked about this before. Make that larger. See there? All that does is give you the octants, right? That's if you, cause like for me, like it's easy for me to know the quadrant levels: 0, 25%, 50%, 75%, 100%. I had to ask Gemini what were the octant levels, right? I had to ask Gemini what the octant level was. These right here, the 0, the 0.125, the 25%, 0.375, 50%, 0.6 point. I had to ask Gemini for these levels, right? But if you don't know those levels, all you got to do is put it in the 4th grade and then put the lower half in the 4th grade and the upper half in the 4th grade, and you got your octants, right? So the octants is just like what we used to talk about back in the day, right? You just put the lower half in the 4th grade, right? Remember back in the day when I used to draw the boxes, I'd be like, you got a premium and you got a discount. But if you break the premium down into a premium and a discount, and then break the discount down into a premium and a discount, now those are your quadrants, right? And you just keep breaking it down, breaking it down. Y'all get it, man. Y'all ain't slow. Y'all get it. Y'all see what I'm saying. All right. But we opened up here on Sunday, right? We traded up, right? We ratted up, traded up into this SIBI right here. Notice, what SIBI is this right here? This is the first SIBI, right? This is the first SIBI that was created before we came down and took out this sell side liquidity, right? When we traded back up, right, into that SIBI right here, right? As you can see, this candle here, it looked like it might have closed. Yeah, it did close above consequent encroachment, right? And then we traded up and closed above it, giving us a inversion fair value gap. All right. Now that we got that inversion fair value gap, we also created a BISI right there at that octet level. Right? We traded up, took out the buy side, came back down into a discount of this latest expansion of this bullish dealing range right here. When we came up and got that bullish breaking market structure, right? Then we came back down to the discount into the BISI, into the order block, high resistance. We anticipated going back to the order block. Where are we? Where is this happening at? At that octet level, right? So that octet level is giving you an opportunity to participate, because why? It didn't give us an opportunity at that lower quadrant this time. Gave us an opportunity at that octet level. Blast off, right? We got a breakaway gap here. We got a fair value gap. Where's that fair value gap? At equilibrium of the entire consolidation range. Where do we retrace back into? The fair value gap did not trade back into the breakaway gap. Why? That fair value gap is resting on that octet level. Hey Tim! Hey Tim! How do I know if I could trust the breakaway gap? How do I know if I could trust the fair value gap? Glad you asked that question, Dinosaur Timmy Rogers. If your fair value gap is resting at a bus stop, get on that double Dutch bus. That double Dutch bus. And for those who don't understand my colorful commentary, you want to look for your PD arrays that's at the bus stops. Those are your high probability PD arrays. High probability PD arrays. All right? Man, if y'all ain't feel it, if y'all somebody get me a let him cook sound effect. Let him cook. Then, as you see, we went up and we made a high after taking out that high. Where's that high resting? Right there at that octet level, inside that SIBI, right there at that octet level. And where is that SIBI? That SIBI is the first SIBI that was created as we left this area, right? And when we were below it, we wanted to act as resistance. Came down, right? We came back up. We're still below it, looking to see if it's going to act as resistance. We traded above it, right? Closed above it here. We're in the premium. And then if you're above it and it was once resistance, if price is bullish, you want to see it be used as support. If it's not bullish, you want to see it cut through it like butter. And what did price do? Cut through it like butter. Why? Because we're back up in the premium of our overall dealing range that we just been consolidating in. Did we get to the upper quadrant? No, we didn't. We got to that octet in between equilibrium in the upper quadrant, right? So we are in a premium, right? This is the extreme premium. We're in a premium, right? Inside of a bearish dealing range, at a PD array that's in line with an octant level and price cut through that inversion fair value gap / balance price range, letting you know that I'm bearish. I'm cutting through a balanced price range, right? This right here is a balanced price range that we left. I'm cutting through it, right? And once it cut through it, right? Look here. Remember what I just said. Remember what I just said. We cut through it, okay? So now that we cut through it, this area right here, we know that it's a balanced price range. And since we were above it and cut through it, now what do we anticipate it to be? Resistance. If we look right here, price traded back up into the lower end of this balanced price range, traded up into this bearish order block right here. See there? Traded over. Bearish order block right there. Right? Once we traded up into that last up close candle right there. Right? Ricocheted off of it. Now we got a breakaway gap there. Right? We got a breakaway gap up there too. And then we form a new bearish order block. Where's that bearish order block? In line with a octant level right there at equilibrium, right? What does price respect? You're right. You're right. It respects that bearish order block. But wait, there's more. Look over here. See this fair value gap? This right here. This is the first imbalance after we took off. But this right here is your fair value gap, because this is when we're trading outside of this range, right? Where are we? Where is that fair value gap? In line with that octant level. Traded up into it. Traded up into it. Dropped, right? Once it dropped, after respecting that. Tim, you got too many lines on your chart. Keep up, right? Right there. Let me draw it out for those who can't see it around all the lines. Right. Traded up into the order block, respected it, right? Closed above consequent encroachment of the inversion fair value gap, traded up into the wick, respected consequent encroachment, drop down, right? Respecting the balanced price range, right? Bearish order block at the octant level, traded up, respecting mean threshold, right? Traded up into the wick, drop down, took out sell side, traded back up above that high, still respecting the wick, drop down. Now that we've respected that fair value gap, now we're over here on the first one after when we took off, right? If you notice, we're doing a lot of work up here in the premium of this fair value gap right here, right? Once we leave that premium, right, what do we start doing? Defending the premium of that fair value gap. Trade up above that high, dump off, right? Once we dump off, come down, we trade back up into a bearish breaker. Where's that bearish breaker resting? At that octant level. Trade up into the bearish breaker, immediate rebalance, traded up into that 1 p.m. candle. This 3 p.m. candle, traded up into that 1 p.m. candle. Then we came down, right? Went from that octant level to that octant level right there. All right. And then y'all see what happened. Traded back up into the fair value gap there. Drop down, got an eagle on. Y'all do me a favor, man. Hit a like for the algorithm. If you ain't subscribed to the channel, please subscribe. If you can't see it, I can't show it to you. If you can't see it, I can't show it to you. Do anybody got any questions for me before we go any deeper? Somebody asked about the what's up? Oh, okay. Just throw it on my bed. Somebody asked me about the octant levels with today's price action. All right, so this is today's new day opening gap right here. This is today's new day opening gap, and we're gonna go down. Let's just go down to a 1 minute chart since we're looking at today, and then we're just gonna look at the New York. Let me go back for a second. Go back for a second, Jason. All right. So, I think what's here to learn and share was asking about the octant levels. These are the octant levels for our overall time, like our overall range, the consolidation area. All right. We're just gonna drop down to a 1 minute chart. And we're just going to look at the New York session for the day, since we already talked about all of the price action. So from pre-market to 1600. All right. So again, this here is our new day opening gap for today. This is where price started trading last night at 6 p.m. All right. This is our New York morning section inside this highlighted area. All right, this is our New York morning section inside this highlighted area, and it begins at 7 a.m. and ends at 4 p.m. Let's put in the 9:30 open real quick. I had all this on here earlier, but I deleted everything already, because I was in here trading a little bit today. All right, that's our 9:30 open there. And then I'll just extend that out throughout the day. All right, that's our 9:30 open right there. Make sure I got it on the right candle. Yes. All right, so, all right. And as we can see, for our overall range, right, at the start of the trading day, right, we can see that price is here at the lower quadrant. That octant level there, that's the lower quadrant. That's the 25% level of the overall range. And you can see that we're working it there, right? Working it there. We go below the new day opening gap, above the new day opening gap, come back to it, above it again, come back to it, right? Drop down below it at the level, back to it at the level, down to the new week opening gap, back to the lower quadrant, new week opening gap, taking out sell side, back up, taking out buy side, use the new day opening gap as resistance now, come back down to the new week opening gap, right? Get below it, use it as resistance, come down to that lower octant level, right? Come down, sweep liquidity, right? After the 9:30 open, right? Sweep liquidity, come back up, use that octant level as support, take us back up to the new week opening gap, right? Hang around there for a little bit, come up, set relative equal highs, drop back down below the 9:30 open, fail to get to the lower octant on the higher time frame, trade back up, right? Take out those relative equal highs at the previous day low, right? Fail to get to that lower quadrant, come back down to that lower octant level, come back up to consequent encroachment of the new week opening gap, come back down below that octant level, come back up to consequent encroachment of the new week opening gap, right? Then we come back down and then rally up at the end of the day, right? That's when I say price had got real smooth for a little bit. Then once we came all the way back up above midnight, traded back down and hung around that lower quadrant, right? Not before we poke down into that BISI right there, right? Poked down into that BISI there. Not only did we poke down into that BISI, right? If we look right over here, traded into that inversion fair value gap before hanging out right there, right? That's the first SIBI before we drop down right there, right? Traded down into it right there at that bullish fair value gap right there. All right, okay, so that's just based off the overall higher time frame, right? That's our levels based off the overall higher time frame. Now we all know time and price is fractal. Okay, we all know time and price is fractal. So if we just look at today itself, right, let's come here, and we're gonna come here. If I can get it to align properly, right? This is just today's trading, right? Just looking at today's trade, just today's range itself, just looking at today itself. So we got today, let me hide the overall range. All right, so that's the highest high that we made back in the Asian, and then it's the lowest low that we made at 9:30 this morning. All right, so that was the extent of our daily range. All right, and then if we go right and put that in the 8th grade, now look at how all those little turnarounds in between make sense, right? And we still just gonna look at the New York session, right? Why does all of this right here make sense before we made that low? Because IPTA knows that this is as low as it's gonna go. That's how all of this makes sense at these octant levels, because IPTA knows how far it's gonna go. We don't know how far it's gonna go. The only thing we can do is utilize the tools that we've picked up along the way to project how far can it go, right? We can use the Fibonacci tool to do projections lower, right? We can use the Timonucci, right? What's the Timonucci, right? As price is trading and we notice, hey, price keeps consolidating right here, right? Y'all remember the Timonucci's, right? I remember who don't remember the Timonucci's? All right. For those who don't remember the Timonucci's, what I'm going to do, I'm going to hide this for a second, right? Because like I say, the algorithm knows this is as far as it's going to go on this run right here. We don't know that. But if we see, all right, price is trading, I'm put this into replay mode, right? And I'm just going to chop that off right here. Chop off, god dog it. Okay. All right. So if we come here and we get us a Fibonacci tool and we just set it up for consequent encroachment, right? Right. So what this is, right? This is a fib with nothing but the 50% marked out, right? This for consequent encroachment and mean threshold. If you're ever watching price, right? And let's just say we go up and we take out some liquidity, trade up into a higher time frame, PD array, whatever, and then price starts to break down, and then you notice that price keeps consolidating in the same area. You can get a fib tool, put 50% on there, and you've just created a Timonucci tool, right? You take that Timonucci tool, you anchor it to the highest high or the lowest low. If it's going up, you anchor it to the low. If it's going down, you anchor it to the high. And then you stretch it, and you take that 50% and you put that 50% roughly in the middle of that consolidation, right? Just like that, right? Just like that. You put it roughly in the middle of that consolidation, and then you say that is approximately where I can anticipate price to go, because price And then you wanna marry it up to like a low or a high if you're trying to project which liquidity is going to target, because price tends to consolidate at equilibrium. Right, this is a way that the algorithm be kind of tipping its hand to you of what it's going to do. It tends to consolidate at equilibrium. Right, is it going to be exact? No, it won't be exact. Sometimes you know might hit it on the head, but it gives you a rough estimate of how far price can go. And see, we went there and said price can pretty much go there, right? And then if we look to where price actually went and bring it to the low of the day, right, we can see that the algorithm was indeed it consolidated here, it consolidated there, it consolidated there, it consolidated there, kept kissing it there, right? So this is the equilibrium point, right? It went above it, came back to equilibrium, above it, came back to equilibrium, below it, came back to equilibrium, below it, came back to equilibrium. That's the equilibrium for the algorithm during this time right here. That's how you can see it before it happens. Hey, that's a good target down there. Oh, throwback gang, remember that. Throwback gang, remember that. Hey man, throwback gang, remember that. And so as we see, what was I saying, the octants, we talked about the octants on the overall time frame, and then now we're looking at the octants for the intraday time frame. And you can see how when you're trading inside of ranges, right, putting it in the 8th grade allows you to fine-tune your entries and help you when price is just ranging. Because why? This is equilibrium of the overall day, right? Once we make this low at 9:30, right? So this is when we start watching price at 9:30. This is the lowest low. That's the highest high up here after of the day, right? So after 9:30, right, we're down here at the lowest low. When price starts to rally back up, right? Let's look at it. Make it practical. Okay. When price starts to come down, made a low there. We trade down, took out that low right there that's our lowest low. We rallied up, traded above that high right there inside that SIBI. Okay. Once we traded above that high inside that SIBI, we set a down close candle, traded down into this. Remember what I said? Tim, which fair value gaps do I trust? Right? We got two fair value gaps here. Right? We got a breakaway gap that's resting in no man's land. Then we got a fair value gap that's resting at an octant. Where did the algorithm trade to? Into that fair value gap at the octant. Now, mind you, this is low resistance price action, right? If it's high resistance, where do we anticipate it going to? Back to the order block, right? Where's that fair value gap resting at? Down there at the order block. So if it pushes through this fair value gap, right, then you can anticipate it being high resistance and coming back to the order block to that fair value gap. But if it's going to be low resistance, this is where you want to see price be supported, right? That's where you want to see price be supported. And then even if it came down to that fair value gap, where's the mandatory stop for a fair value gap, right? Candle 1, candle 2, candle 3. The low of candle 1 is the mandatory stop for a fair value gap based off how Michael teaches it. The safe stop will be below the swing low. So even if it came back down into that, the mandatory stop has that covered. Because why? If you come down, right, if you violate this right here, you're trading through that wick, you're trading through that fair value gap, you're trading through that bullish order block. If it violates 3 PD arrays, he teaches you're probably on the wrong side. Violating 3 PD arrays you're probably on the wrong side. All right, 1, 2, 3, right, and your stop would be resting below mean threshold of that third one. So that safe stop in this case is where price should not go based off of how the algorithm works, right? And it's in line with an octet right there. I can't take no more. I can't take no more. Do anybody got any questions? Let me see. I see something in the chat. I see something in the chat. What's the Timonucci? Hopefully I explained that well. It's just a fib, and you set it to 50%, and you I call it the Timonucci because I figured it dawned on me that when price be trading and it start consolidating, I said, hey, if price accumulates at the 50% mark, if it start accumulating, I should be able to stretch this field from that low or that high, put the 50% where it's accumulating at, and that should show me where this price run should go to. That's why I call it a Timonucci, right? Because that's something that I figured out on my own. Now, when we look at the projections, you know what I'm saying, I give all credit to Michael for that, for the projections, the bullish and the bearish projections. But the Timonucci's, I kind of figured that out myself. Can you explain the basis of the premium and discount zones? All right, they're not zones, but we can use zones because that makes sense in your mind. But premium and discount, you look at the highest high and the lowest low of the dealing range that you're in, right? So you're looking at your dealing range, and we're going to just look at a daily dealing range, right? So based off of the well, let's just look at the week, right? We're going to look at our week, right? Let's go to a daily chart, right? Last week, when we started out this week here, right? This is where we started out this week at right here. We started this, God dog it. We started this week out right here. So as we start this week, these candles didn't exist, right? So let's chop them off, right? So coming into this week, this is what price looked like, right? So based off last week, that's the highest high, that's the lowest low of last week. Now, that gives us a algorithmic dealing range because that's one complete week. The algorithm understands this was the highest high, this was the lowest low, right? From that week, this was this is Monday, this was the open of that week, and this was the close of that week. So we got our open, high, low, and our close from last week, the three pillars of price, right? So now, if we look at from the highest high, right? So we're just going to put this on consequent encroachment, mean threshold. If we go from our highest high down to our lowest low, okay, for that dealing range, anything below 50% is a discount. Anything above 50% is a premium inside of that dealing range. And time and price is fractal. So any dealing range that you're looking at from the highest high to the lowest low, anything below 50% is a discount. Anything above 50% is a premium. Now, you don't want to just randomly pick an area and say, this is my dealing range. You want to go based off of algorithmic dispensations in time, like a week, like a day, like an hour, and anything that the algorithm understands as this is a complete portion of time that I understand. You can utilize that as a dealing range and then trade on lower time frames inside of that dealing range. Okay, it's just like a day, right? This is a day, so you can look at that day, highest high, lowest low of that day. Now that is a algorithmic dealing range that the algorithm understands, right? And we put the next day on. That's our next day right there. So looking at our next day, right, now we're gonna, this is the beginning. We're gonna highlight just that day. All right. So highlighting just that, we're just looking at this day here. So we're looking at the dealing range of Friday, and we're looking at the price action of Monday. So now if we go down to an intraday time frame, we're just gonna drop down to 15 minutes, right? We drop down to a 15-minute chart, right? And then we look at, right, what Friday did, what Monday did inside of Friday's range, right? We opened up in a deep discount matter of fact, we opened up outside of the range, right? Because this is the lowest low. Let me put the high and low on there too, just so we can see the high and low. Right, so we got a high and low on there, right? So we opened up outside of the range, meaning we swept sell side liquidity, right? So we immediately open up, swept sell side liquidity, and now, right, we're down here in a discount, deep discount. So the algorithm is buying up, right, coming up. Then we get up here to equilibrium, right? And once we get to equilibrium, right, we see that price continues up, right? We had a nice trend day to the upside. So now you're looking at the whole day. Now, what can you do? You can go in, say time and price, everything is fractal, okay? When you take liquidity on both sides, you establish a dealing range, right? So we opened up, swept liquidity, right? We traded back up, swept liquidity here, right? Now, if we look here, we see that this is efficiently delivered area, and we leave that area. So now we're looking at the latest expansion of our ranges, right? Break it down. So we took liquidity, traded back up, took liquidity. Now this here, right? Looking there, right? That's a dealing range, right? Why? Because we took liquidity, came back up, took liquidity, right? We got a dealing range there, and then we automatically blast off and leave this efficiently delivered area. So now we have extended our bullish dealing range, right? Because we got a bullish breaking market structure. So now we've extended our bullish dealing range here, okay? But we're not looking for it to come all the way back down into this discount. Why not? Because we've left this area. So now once we trade above this high right here, right, we're no longer wanting price to come back down. We're looking at the latest expansion of our dealing range. We always want to trade the latest expansion of our dealing range. So what is the latest expansion of our dealing range, right? When we leave this area. So when price retrace back down, where do we come back to? We came back down to a discount. Not only did we come back down to a discount, we came back down to a discount PD array, a bullish fair value gap right there. So there's your discount PD array and the latest expansion of our bullish dealing range, right? And then, you know, and we can also, just like everything else, everything is fractal. If we put this into the fourth grade, right? If we put it into the fourth grade, right? Came down to that lower quadrant. That fair value gap is in line with that lower quadrant. It's at a bus stop. Went up. When we traded back down here into that gap right there, all right? Come up there. It's our highest high. It's our lowest low. Came back down right there at equilibrium. Fair value gap in line with that quadrant right there. Bullish order block right there in line with that quadrant. So now you got the premium and discount of the latest expansion of our overall dealing range right there, right? We just keep extending the dealing range up, but we're looking to trade inside the latest expansion. Okay. All right. Hopefully you understand that. Premium and discount. Oh, so that's the equilibrium of the day. Where is the consolidating consistent? Oh, so that's the equilibrium of the day where it is consolidating. It could be the equilibrium of the day. It could be. It could just be the equilibrium of that session. It could just be the equilibrium of that hour. It could be, but it's not going to guarantee, oh, that's the equilibrium of the day. It's all about where you are in price. You know what I'm saying? Where are you in the buy program? Where are you in the sell program? It's just that's giving you the equilibrium of the dealing range that the algorithm is operating in at that specific point in time. Right? It could be the equilibrium of the day. It could be the equilibrium of the week. It could be the equilibrium of the hour. It could be the equilibrium of that 15-minute candle. It's just, that's just a way to see, hey, this is the halfway point between that high and that potential low, or that low and that potential high. That's like your anticipated dealing range. All right. Y'all do me a favor, man. Hit a like for the algorithm. If you ain't subscribed to the channel, please subscribe. That's all I got, man. Gang, y'all got anything? Hopefully y'all learned something today, man. Hopefully y'all learned something. If you ain't learned nothing today, man, I don't know. I try to figure out a way to say it better. If you didn't catch the live stream and you just tapped in, I'll be dropping 3 gems from the live stream tomorrow. That's my new format for the channel, where I do the live stream after the market close at 6, and then I try to post 3 gems from the live streams, and it's in the order in which I went. I post the first one looking at like from the higher time frame at like 9 in the morning. Then I post the first intraday time frame goes live at 12 noon, and then the third deeper dive intraday time frame goes live at 3 p.m. So you get it at 9, 12, and 3, and then we come back at 6 to do the price action recap again, right? For those that didn't know, that's the new, the new format of the channel. I'm trying to, make it easier for the people who can't make it to the live stream to go back and get the gems from the live stream in shorter chunks, shorter bite-sized digestible chunks. And those, who want to go back and rewatch it, but they don't want to skim through the whole live stream trying to find that particular part. Now, the first one that drop at 9, that's going to be the higher time frame. The second one that drop at 12, that's the first, when we first drop down to the intraday time frame, probably like a 60-minute or whatever. And then the third one is going to be when we do the deeper dive, looking at either 15-minute or 1 minute, when we just looking at the New York session. All right. Hey, man, that's all I got. I appreciate y'all. Y'all give it up for yourself for pulling up, man. Give it up for yourself for pulling up, hanging out with me tonight. I lost my train of thought. Hey, man, if this was your first time tuning in. Yeah. Yeah.
I say check your text right quick before you go. You want on mute. There you
I'm about to put that in.
Let him cook. Let him cook now. Let him cook. I said let him cook.
I'm about to add that in right now. I'm about to add it. That's gonna be enough. I never realized that's how the gyms were structured. Hey, I'm glad what's the name? Yeah, C-Walk, you got in late. Yeah, so if you don't get a chance to rewatch tonight, C-Walk, tomorrow the gems will drop. So the one that drop at 9 a.m. it'll be like the higher time frame. Then the one that drop at 12 will be the first intraday, and then the one that drop at 3 will be the deeper dive into the intraday when we go into like the New York session. Or you can just go back and watch the full thing tonight. Right? That's it, man. Y'all do me a favor. Hit a like for the algorithm. Subscribe to the channel if you ain't. Share this out with somebody who you think might get something out of it. Trying to help the channel grow and get in front of more people. It don't cost nothing to like it. Don't cost nothing to share, man. I don't get paid for you liking. I don't get paid for you sharing. Just trying to reach as many people as possible, man. We want to try to make the community grow. You know what I'm saying? If y'all feel so inclined, we got a Discord. If you want to pull up in Discord, you know what I'm saying? It ain't necessary for you to tap into the Discord, because I'm still going to do what I do here. But, you know, if you want to tap into the Discord, feel free. Do that. It's $50 a month. Right? We do a monthly Q&A. We do tape reading every Wednesday. We do intraday. We do pre-market analysis Monday, Wednesday, and Friday every week. And we do random pop-ups. I ain't been doing no pop-ups lately because I've been busy, but we do random pop-ups too. That's it, man. I appreciate y'all for hanging out with me, man. You're welcome. You're welcome, Gigi Tika. I ain't never seen that name before. If you've been here before, and I said this before, I jalapies, but I don't remember seeing Gigi Tika. I appreciate you for pulling up. If you ain't subscribed, please subscribe. Hey, man. Till the next time I decide to get on Al Gore's internet and share my thoughts with this thing they call price action. It's your boy Timothy Lee Rogers Sr., aka Rania Grande. That just be a big spot if you in Habla Espanol. And man, y'all been in tune to another episode of the NQ Price Action Recap. Feel me? Hit y'all with a new one more time, man. Y'all be safe out here these trading streets, man. Gone. Yeah.